Hey everyone, it's Nick with Us versus Her. Thanks so much for tuning in. Hope you're having a great day. Today in the markets, pretty volatile. If this is your first time here, please hit subscribe. If you're already a subscriber, please hit that bell button. You get notified when I go live. We post a new video or I go live 3:30 every day, even on the weekends. No days off. We don't stop. If this video is of value to you, please press like. But today the markets were up. Dow was up to 100 points. S&P's up 10. NASDAQ up 53. And that's pretty interesting because at one point this morning we were CNBC was pushing out push notifications like Dow's down 100. Dow's down at one point. Let's get the 15-minute chart here. 15-minute chart. Where are you? Oh, here it is. 15-minute chart. If you look at here, last night, this morning, Dow was down a ton, recovered a lot. So, it goes to show you, don't always believe the news, don't always believe the push notifications. Just do your best and keep trading. Welcome everyone that's here. Welcome everyone that's watching right now. What I want to talk about today, obviously I'm going to be taking questions from everybody. If you're here, leave a comment. Love to get your input. But what I want to talk about is when do you take profits? And enjoying Dallas, welcome. Enjoying the video from West Texas oil field, welcome. What we're going to be talking about today is when you should take profit. So one big question I'm always getting is like, when should I take profit? Especially like newer traders or traders that just put on their first trades. Like, sometimes you get lucky. You put your first trade on, you're up 100%, 200%. It seems like you just keep making money and you don't know when to take it off. And what I tell people is I'm going to show you some real examples here on where you can how I've made money or lost money in the last couple of days, including today. But what I want to kind of go through here, when you put a trade on, you should always have an entry strategy and also an exit strategy. And that exit strategy doesn't always have to be at a loss. You should have a profit target in mind. Like for me, when I buy options, so when I'm buying premium, when I'm buying naked options, my target's usually 100%. Anything above 100% is cake, and I'm like super grateful. But 100% is usually my profit target. I don't get greedy if I'm at 80% and it's struggling to get to 100. I take my profits. If I'm selling premium, so like spreads or iron condors or that kind of thing, my profit target is 50%. And the reason for that is because it's really rare you're going to make 100% profit, because that means your option has to go to zero. Unless you get like a major move, especially like on an iron condor or something, you're not going to hit 100% profit on those spreads. Like if you're at 40% profit and it's struggling to get to 50, I definitely take my money, because like I always say, you have a lot less, you feel less bad when you take profits and than you do when you're taking losses. You feel way worse when you take a loss and you do profits, and you learn, you got to learn from it. So a couple trades here that I did in the last couple days. So Tesla, right now I'm currently down $25 on it. And if you've been following me the last couple days, I talked about this a little bit yesterday. Tesla, I have up in here in the upper right corner here. Tesla, I put the trade on Thursday. It was a pretty flat day. I thought it was going to have recovery. It went up. Actually, I put it down in here. It actually popped up and then it flatlined back down to here, back in the 278s. And it's actually back there now. So I'm back to where I put the trade on. I'm down $25. But then immediately after it dropped down to 252, I didn't cover. I was already at max loss, so I figured I'd let it ride out. Usually stocks that go like this have a little bit of overreaction. Yesterday, Tesla had a $22 move, and I was actually profitable on it. I think I was up $22 on it at the time, and I didn't close it out because I thought there was going to be some continuation. However, there were some downgrades this morning, some stuff like that. So, yesterday, I could have took my profits on here, which I probably should have. So what I probably should have done here, took my profits, got out of the trade, and if I want to do another Tesla trade, probably traded it today. You know, I should, you know, on a $22 move is a huge move for Tesla. You know, what I probably should have done, because right now I'm back to fighting to break even. You know, I'm down $25, but I was, you know, I lost $42 on it today. Because I was actually up about $18 to $20 yesterday at the close. So I gave some back today. So at this point, the reason why I held it is due to this bounce here from 273 up to 279. So this bounce here, right now I'm just going to hold it. Tomorrow, regardless, I'm probably going to cut these loose, you know, win or lose, mainly because we're getting close. Friday, my spread expires. So I got to be above, I needed it to be around 285, 282. So a little bit higher than this. You know, it definitely could do it, but what I should have done, I definitely regret not taking this trade off. Taking, you know, it was a full loser. This trade was a full loser, so I was down 125 bucks, and then I came back in one day profitable of like $20. So I had a $140 swing, and I didn't take it, and you know, definitely something that you got to be careful about. So even if it's a small loser, doesn't mean, or a small winner, it doesn't mean that's the right trade. You know, due to all the news and everything that's going on with Tesla, you know, it definitely makes it difficult to trade. So I should have got out, and I should have probably, you know, realigned and put on a new trade on today. Took my small winner, be glad that I didn't lose any money on it, and now we're back to like a losing position. You know, we're not losing huge, but we're back down to a losing position. The other trade that I did here was AMD. AMD, I bought a strangle on yesterday. I closed it out here for 94. So I had a strangle. So for this week expiration, 28. It was 28, and I had the 28 put and the 30 call. I bought it. I sold it for 94 credit. So I actually lost $12 on this spread today. And let's go into AMD. Let me pull up AMD chart. Let's get rid of the square, just so you can see here. So AMD actually ripped yesterday, as you know, went up like what, 6-7% yesterday. AMD went from 28 to basically 30 in a day. I put the spread on in here when it was kind of dipping down, and then it went up, and I was profitable on it by about, I think, $15-$20, and then I just closed it out today for a loser of $12. And this kind of shows you that when you don't take profits, it kind of goes against you. You know, my risk on this was like $100, and you know, my profit was only like 10%. I didn't take it, and then today it just ate away because we gapped up a little bit, but as you can see, we're pretty much flat like today where this line is. So where it stopped yesterday at like 29.91. We closed the day at 30.10. So really, like, you know, I know it moved a lot today, but if you're swing trading this, you didn't make any money because the stock is pretty much the same price as it was yesterday. The only thing that you're doing, you're losing that theta decay. So that theta ate away at my options, so that's why I lost the $12. So you know, it didn't really move a lot. It did move $1, but it'll show you it is up $1 since when I put the trade on, and that kind of shows you how strong theta is, especially when you're trading a little bit overpriced options on AMD. You know, that will show you the power of theta decay. You know, I put the trade on in here. It went up a whole $1. I was only up like 10-20%. And then today was flat for the most part. You know, we're up. Well, it was up almost 1%, but it was only up 20 cents from yesterday. But that theta just came in, and they snatched up premium. So what I did is I closed that out for it. It was a small loser, $12, and then I realigned. I tightened up my spread, and I bought the 31 call and the 29 put. So I kind of just moved everything up $1. But as you can see, now the spread's only worth 82 cents. So I bought that for 82 cents instead of a couple days ago. This spread was worth you know, 100. I bought it for 110 or something like that, $1.10, you know, somewhere in there. I wish there was a stop sell limit order function on Tastyworks. I think they do have a stop loss. I'm not sure. I don't personally use stop loss. Mainly because I don't trade that aggressively, you know, when I'm trading some of these things. And I noticed that, like, if you're trading naked options, stop losses could really screw you, because sometimes at open, like if you take a look at you know, AMD, it went at open here. This is the, just so you know, these are the 15-minute charts. AMD, I mean, it went from 30.40 down to 29. If you have a stop loss, it could definitely trigger those stop losses, and you may not want to trade during high volatility periods unless you're making money. But stop loss. I mean, if you want to put in, what I would probably recommend is put in orders for something that you want versus having a stop loss. That's my own thing, because you can definitely, market makers definitely will hit like these large swings here at open on AMD are definitely triggering stop losses, and you'll stop out, and you at the same time then it really just did nothing the rest of the day. So it stopped you out, and then it came back up, and then you're out of the trade, you lose the money. So that's why I don't like using stop loss. If you have good control of your portfolio, you don't really need a stop loss when trading options. I know that like for stocks this may be a good thing, but for option pricing gets skewed and manipulated. So it's not always in your best interest to do that. The other thing is, so Alibaba is another one. Alibaba, I've been trading pretty aggressively because on the yearly, if you're not sure about it, they're kind of in battle right now with the trade war. Keeps hitting 52-week lows, and actually on the bottom part here, yesterday I had a strangle on. I had 150 put, 162.50, 162.50 call. And what I was looking for was a $6 move in either direction. I thought that I had it on lock here this morning. 152.80, it dropped down when it opened here. We were at 152.80, 159, and I was profitable. I was profitable by about $40, $50, and I didn't take the money. And what I should have done, I should have took the money and realign my portfolio. Now I'm not too worried about it because I think that it's going to still work out by week's end. But as you can see, I went from profitable of like $40, $50 to now down 79 on this. I think my total cost basis on this is around $1.30. And right now it's telling me, let's see here, we're at, I think maybe I got it for $1.40. I'm down about 50% on this spread. So I have the 162.50 call and 150 put. So I just didn't react quick enough because I really didn't think it was going to drop that or go up that much. It was nice to look at this morning when it dropped that low. I was pretty profitable, but then it just ripped right at open, as you can see here. I mean, it almost did 4 million in volume. I mean, that is nuts at the open. Baba did about 4 million at the close yesterday. But as you can see at open today, I mean at close today, barely did even 2 million in volume. So huge volume rush. Was not expecting the buyers to come in. I was looking for a little bit more panic or people to panic sell at open, and they did not. So at this point, I'm just going to hold it. I've made a lot of money on Baba in the last couple of weeks just on this downtrend here. So worst case, if I do lose the 100, it's not going to be a big deal. But I'm always trying to minimize risk. That's why I realigned the AMD position. I'm always trying to minimize risk. And what I should have done was took either break even when it was starting to rip up, or take my profits and then get into a new position. So like what a lot of people do when they say, hey, I'm up 100%, I'm up 200%, should I take my profits? Or even I've seen people send me messages like, hey, I'm up 1,500%, should I take my profits? And you can always enter in a new position, because as you can see here, based on these few trades, you can see how you can go from profitable down to an all right loser just like in hours. So that's the danger about trading options. Yes, you can make a lot of money trading options. You can do great, but there's a lot of risk when you're profitable. Take the money. Hamed says, how do you close your strangle when you made profits? Do you close one profitable leg and maybe wait to move down or up to sell the other one? Just simply close the position at the same time. So for me, my trading style is a little bit different. Like some people like closing the legs individually. It really depends. Like I could have made more money if I closed like the 150 put out here and then close the the 162.50 call up here. Sure, I could have probably made a profit on this whole thing. I don't like doing it that way, mainly because when I put the spread on initially, I put it on for a certain reason, and I put it on for a certain. It has a certain range for a certain reason, and then when I break that spread, you know, I could be having problems because you could hit a double loser on it, is what I'm saying. Because what happens? What could have happened? Let's say I closed the put out down here. It went up. I thought there was going to be a continuation, and it just went up, and then it didn't, and then it crashed back down to 152. So I'm gonna you know, I might have a double loser where I lose on the put and lose on the call. You know. Well, not necessarily. It would probably, I'd have to close that put out here. So if it was spiking up and I'd have to close this put out up here, it would probably be a losing trade if I closed the put out here versus down here. And then if it didn't go back up, that call would then be worth less or even worthless. So I don't like breaking spreads unless unless you're so far out of money. Like let's say one end is so far out of the money, then I'll break the spread, because then that means the one side of the spread is going to be really profitable. That's why I would break my spread. But I've had double losers on spreads like that before, and I don't really like trading like that per se. Mainly because when I put a spread on, I put it on for a certain reason. If you guys have any questions, I'm answering questions. Quite a few people have joined this feed or this live stream. Definitely ask your questions below while I kind of go through these things. One trade that did do well today, it was a small winner, was Microsoft actually. So Microsoft, as you can see here, I closed out this morning 75 cents. I put this position on yesterday for like 38 cents, so it was a 100% winner. And what I did here is this morning, so I put up trade on yesterday. It spiked up big this morning, and down in here on the spike, I closed it out, but I only had a call on it. I didn't have a spread. I had a call. So I actually timed it right. I closed it out at like 110.60, and it kind of retracted a little bit. And then when it retracted, I actually bought the. So I took my profits. So I lowered my risk. I took my profits. I lowered my risk, and then I bought a super tight spread, 110 put, 111 call on this, because I thought right here, usually when you get big spike ups, you're going to either go stay flat the rest of the day, which I was anticipating for, or it could retract back to 109 or go back up to 111, which now it's at a 111.31, and we're down $1 on it. So this spread I'll be looking to close out tomorrow. So Microsoft was a low risk trade here, but this was one example of a time that I did take profits today. So made some mistakes today, but we learn, we grow from it, and that's how you do it. And each stock has its own personality. And also the only reason why I took profits is because I learned from my mistakes in the past. So let me show you what I'm talking about. So back in July, was it? Let's see. Yeah, July. So back in July, I had 111 calls on Microsoft, and I was up about $100. I was up about $100. Cost me $1. I was up about 100% on it. It spiked up right here. Let me actually zoom in on this so you can get a better idea here. So I had these calls. I bought them down to like 107, 108 area. It spiked up. I bought these 111 calls. I was up pretty big on them, 100%. And I don't know exactly remember what happened, but in the news, something happened in the news. Maybe some trade stuff. Who knows? But it retracted all the way back to 104. So this is another reason why today after I made my gains, that's why I put on a spread, is something like this, because after last time I traded Microsoft, and you can see these bars are very, very similar. This was today's bar on the right hand, and this was this bar over here. And it spiked up. I didn't take profits because I thought, we're going to have some continuation here. I'm up 100%. And I didn't take the money, and then I lost money on that. I lost my gains, and I think I gave some back, even, sadly. So that's not good. So this time it spiked up. I took my gains, and then I put on a new position to kind of protect me. If this drops back down to here, 106 or something, I'll be making some cake, because I'm protecting my profits, and then I put a new trade on that would protect my downside, but also it does have the potential to run to 112, 113, so I'll also be making some gains. So I guess the only way that I won't be making money on this trade if it just stays flat the rest of the week, which based on these kind of based on Microsoft's bars like these is not likely. It'll either run for a couple days, like back in here, went from 108 up to 112, kind of nonstop, or back in here went from 108 to 111, then retracted to 105. So either way, at this point, that's good. So, you know, as a newer trader, you know, get disciplined about taking your profits, because, you know, profits are difficult. Like, this is real work. You don't necessarily, this is not free money when you're trading. You're not just, oh, I stumbled upon these profits and now what should I do with them? You know, it's, hey, it took work to put that position on. Now you're rewarded. You should take that money, because then you can always put a new trade on. Because as you can see in the last couple of days, there's yeah, my winners have outpaced my losers this week, which is good. But today, I mean, I got beaten to death on Tesla because I didn't take my profits yesterday, because I thought there was going to be continuation, which is, you know, the risk of leaving it on overnight. Baba, you know, definitely thought we were gonna, you know, this could have easily went the other direction. I could have been making a lot of money, but as you can see here, you know, stocks don't necessarily do what you want it to do. There's a lot of risk in that. So, you know, that's really all that I wanted to say in regards of taking profits. And, you know, if you're new to trading, you know, don't just get discouraged when you're losing. You know, it does hurt, you know, paper trade, but get disciplined about taking profits, and also get disciplined about cutting losses. Like, know when you should start cutting your losses. But this is you know, I just want to make this a short video. If you guys have any questions, leave a comment below. The channel is growing super rapidly, faster than I ever thought. So if you're new here, hit that subscribe button. Definitely appreciate everyone. If you're not part of our free options trading group, there's a link below to that as well. Thanks a lot, guys. Have a great night.